Yeah, Mr. Puranik, my voice is audible.
Yeah, yeah, audible.
Okay, now our guest is available. Uh, I think right time to start. Mr. Puranik, can you please quick start the meeting?
Yes, sir. Am I audible, sir?
Yeah, you are very well audible.
Okay. Namaskar, good
Thank you.
morning to all of you. Welcome to this our series of knowledge sharing webinar today on Saturday, 8th of October 2022 at 11. This webinar is regarding the role of COC in CIRP. I am Ranjendra Puranik, Director of Persistent Insolvency Professionals Private Limited. We are a company of 127 insolvency professionals and valuers all over India. We have got a team of CAs, ICWAs, company secretaries, bankers, ex-chairman of the bank, and valuers in all categories. So anything we can do under the sun as far as IBS is concerned. So then, we are lucky to have our Mahaguru in IBC and a very experienced senior professional in IBC, Mr. Mahalingam Suresh Kumar ji to deliver his lecture on the role of COC in CRP. Actually, I think just a few days back on 20th September, he delivered a lecture on interplay between section 30, 52, and 53. Actually, it was a very wonderful lecture, sir. Today, he is going to give us insight into the role of COC in CRP. Actually, why we are selecting this subject, I'll just tell you because see, when you go to the practice now, we should know each and every particular section. That is why now we selected 32, 52, 52, and 53. Now it is only a COC, how we are going to handle. So this area will help you in your practical experience. So that is what our Suresh sir is going to address you. So with this, I will request our our promoter and founder, Sri Vinod sir, to address the gathering and take the proceedings further. Thank you.
Yeah, thank you, Mr. Puranik, and Anupji is there, no? Anupji, Mr. Anuprakash Avasthi ji.
Yes, sir. I'm available, sir.
Yeah,
I'm available.
Anupji, this is the time for you to address the gathering. Then after I will take the mic. Please, sir.
Pardon, sir?
Yeah, please address the gathering, sir, as we.
Sir, this is a wonderful occasion that we have our Mahalingam Suresh Kumar Saab for our as our speaker, and it will definitely be a very enriching and enlightening session, and it will be for the benefit of entire PIPPL and the group. And since we are continuing with all these sessions, I am sure that all the members shall be more informed, more get in tune with the CIRP, and we would go get business also CIRP and otherwise from CIRP. So this is a good continuation of good beginning that we had, and I am very optimistic about the future of the activities being conducted by us. Thank you very much, sir.
Thank you, Anupji, for the great in, addressing and the idea why we are in the platform and promoting all the things. As Anupji said, yes, we are gathered together as a national infrastructure across the country to promote the IPs. It is not that for some other purpose we are getting gathered. So we are having a big mega platform. Now the IBB etc. is thinking about having good infrastructure for supporting the CARP liquidation process. So we are on the other side, we are ourselves come up with a very big platform. Okay, we are having 127 offices across the country, and 15 NCLT zonal offices, and professionals having monitored 2000 more cases in IBC. This is what the full pack what we are having. I'm not counting one by one of the achievement of the panelists what we are having in our system. Yesterday we had a great session with Mr. Anirudh about the legal updates, and Suresh sir program is planned in a serial manner, which is actually for the perspective of the bankage. We are having a discussion with Suresh sir today also to having a discussion, having a knowledge sharing scheme exclusively for the IP, consisting CARP as well as liquidation. Suresh sir is not the first time addressing us. When the initial stage, when we have thought about having this infrastructure, he had given a very beautiful lecture on the infrastructure requirement of IPs. People may be remembering about that. And in this series, the first session is over. This is the second session, exclusively taken for particular area There we wanted to make IPs enriched with that particular knowledge level. Okay. By this, I would like to again, no need to introduce Suresh sir. Yesterday, Suresh sir had a beautiful session with the IIIA session. You may be seen that most of them seen that, and still, as a custom, I have to just introduce Suresh sir once again because there are more new viewers. CA Mahalingam Suresh sir is a practicing chartered accountant with an independent practice stretch of more than 2 decades. He has been active insolvency professionals since the advent of Insolvency and Bankruptcy Code 2016. Rich experience in domain. He is also handled uh, a number of CARP and liquidation cases. More than that, he was happened to be consultant for many IPs and bankers for making decision making in the IB Street matters. Suresh sir is also a practicing chartered account, which I already told you. He is also do a number of services under IBC like a certification of 29A and validation of the resolution plan, and the study and feasibility of taking cases for the IBC. And he is also a FEMA expert and a FEMA consultant. By this, I would like to invite our special lecture speaker, Mahalingam Suresh Kar, to deliver and enrich us more. Welcome, Suresh sir.
Good morning, PITPL members and fellow insolvency professionals who are present for this session. I hope I'm audible, comfortable to all of you.
Yes, sir. Good morning.
Am I audible, clear to all of you?
Yes, audible, sir.
Yes, okay. So, yes, last month end we had a session on the background of the IBC and regarding the initiation of the CIRP process. We had it. We are more focusing in the angle of lenders' perspective on the IBC, how they have to prepare themselves for in that context. So today we are moving to the next important topic on role of the committee of creditors in the CIRP process. When see the role of resolution professional and the role of COC are completely interlinked, and they have to work seamlessly to make any CIRP process successful. If there is a tug of war, or if there is a dispute between the RP and the COC, then the entire CIRP will get into a problem and the life of the RP will become a big headache. So at the same time, this law being a new one, whether the entire COC community, which is comprising of the lenders across India and some rare cases, the operational creditor constituted COC, whether they are updated enough, whether they are educated in the present law, its updated current changes, their duties and responsibilities. If we see the current spread of knowledge of IBC among the lenders, among the operational creditors, is less than 20 to 25%, less than 20% only actually. Even in expert banks like State Bank of India and all, only pocket of people have the idea of IBC and its working. If you take the stressed asset branches, asset recovery branches in all the banking, they have good knowledge on insolvency process. But when it comes to operational branches, commercial branches and all, the knowledge of insolvency is very limited. Only when it gets into the asset gets into a stress and it gets into the vicious circle of debt where they are not able to come out of it, and when the account moves to this asset recovery branch, it gets into the insolvency process. This is how generally the Section 7 petitions, more than 90% are coming from the asset recovery branches or stressed asset management branches of any of the banks, be it nationalized or commercial banks. That's how currently things are going in. The reason being, the limited knowledge on the insolvency among the lender forum. I mean, the lenders today, if you take bank, has lakhs and lakhs of employees, but hardly some 5,000 employees might be aware of this insolvency law and its working mechanism. Yes, it's a responsibility of IBPI, the IPAs, and many of the IPEs and IPs to disseminate this knowledge across the business fraternity, across the bankers, across all lenders, across the various trade associations and everywhere. We all have to collectively take steps to spread this particular knowledge. One side, we as insolvency professional, we all do it for our personal reason that if the knowledge spreads, we will get more business. So that's a personal advantage to that spread of knowledge. Other side, the entrepreneurship can grow well. If the entrepreneurs who are failing as an opportunity to come out of the debt-strapped enterprise, and if they can start something new from the scratch, that will facilitate new things to come up. So that those things are well established in the Western developed countries. The thing is getting fairly introduced and getting established in a country like India. Here in a country like India is more sensitive towards business failure. People think that business failure is a personal failure. They attach so much of their personal ability to the business. When the business fails and when they get into the debt trap, you would have come across so many suicides, which is all we treated the business failure as personal failure. See, finally, bank is in the business of lending. Like we are in the business of trading in goods or providing services. Same way, bank is in the business of lending money to us, or lending money to the business people. And if there is a default, obviously, like default in goods payment, same way there is a default in money payment. And so long as your intention is not to cheat the person, cheat the banker or whoever it is, you have made all your honest attempt to service to the best possible extent, you are fair to the business of banking or lending things. And if there is a genuine default, genuine failure of the business, you have an option of a gracious exit under the insolvency law. So that's a big boon to entrepreneurship, which has been brought under this IBC in 2016, based on the TK Vishwanathan Committee BLRC report. It's a great move, and 5 years completed. Even 60-year annual day has been celebrated by IBBA in the recent days. So that's we have come to a great level. We have means in the beginning stage we have crossed. We are now into the maturity league. So from the end, as far as CIRP is concerned, as far as individual insolvency is concerned, we are just beginners. We have to travel a long distance. Today, we are taking up the role of COC, mainly the lenders who are part of the COC. Some rare cases, the operational creditors are part of the COC. So I have limited about 15-20 slides for this session. And I would request to whomever wanted to ask any queries, you can intervene then and there, or you can keep the questions reserved. We can have it at the end. In whichever way you wanted, you can have it. So I have shared the screen. I hope the screen is visible to all of you. Can anybody mute and confirm me whether the screen is visible?
Yes, sir, the screen is visible very well.
Right. Okay. Right. Okay. So today the role of COC in CIRP, the entire CIRP, this IBC, have changed the fundamental regime of debtor in control to creditor in control. Debtor in control is nothing but the board of directors appointed by the shareholders who are controlling the enterprise. So when bankers have lent and if they have defaulted, the bankers have big difficulty in taking possession of the asset and selling it. And if that particular business was just kept in a going condition, going control means concern mode, it becomes very, very difficult for them under SARFAESI or any other provision to take possession and sell it to third party, which IBC have changed the scenario totally. Now, court appoints an officer to take control of the asset. No stay, nothing. There is an order, on the next day, you just go and take control of the assets and the business completely. So bankers are relieved of taking possession of the asset in a big way. I mean, we have seen the difficulty faced by the bankers for getting various approvals and procedural clearances, manpower support, and to take possession of any asset. That too, if it is an inoperative asset, somehow they are able to take it. If it is an operating asset, so they are unable to do it. Rare cases only they were able to take it in case of operating assets. So that scenario has changed completely for lenders. Now, once IBC has come into picture, CIRP commenced, it is creditor in control of the business. In the sense, RP appointed by the court as a court officer, he takes responsibility and he is administered, he is monitored by the committee of creditors. So it's a big change from debtor in control to creditor in control. So today, as a creditor in control, as the COC replacing the board, the roles and responsibilities of the board of directors, now currently the committee of creditor, is wide. And the success of the CIRP depends mainly on the commitment of the COC and their interest, their active participation, their timely decision making, their commercial wisdom. All of this collectively play a role, along with RP's efforts in resolving the case to make the CIRP process successful. If any of this is not working in tandem, the end result is liquidation of the company. So if an enterprise have to survive, have to be maintained in going concern, and if it needs to be revived, which is the objective of the IBC code, the RP on one side and the COC on the other side has to work together seamlessly and take decisions on time, fund the requirements appropriately on time, and keep the entity going concern and find resolution applicant properly, evaluating him in terms of ability to manage continue the business, ability to fund the entire plan amount and all those aspects, and his disqualification matters, and then approve and take it to adjudicating authority for approval, be a part of monitoring committee and facilitate the migration of this ownership from originally from debtor in control to creditor in control, then creditor in control to the new debtor, new resolution applicant in control. So this particular transition, the RP and the COC have to work in tandem, seamlessly coordinate each other and make this entire CIRP a successful exercise. So the COC being the core decision-making authority in the process, does the law specifies any duties and responsibilities on the COC? Except for the decision-making powers in the law, the duties and responsibilities are not clearly detailed in the IBC process. There are various study groups are formed, various articles and reports are already published for defining the necessity for a code of conduct for COC and all those things. Till now, it's not yet formalized. There are here and there some of the other documents. Today, I am going to take this session more of the compiled information of various inputs, collected by IBPA, various IPAs, and whatever inputs I had collected gathered from various discussions from IP members and my own interaction with some COC members, their suggestions. All those collective information I am putting together in the form of a presentation and trying to share it. I have about 20 slides, may take about an hour or so maximum, and it depends upon your interaction. We will have a fruitful learning session in this next 1 hour's time maximum. Moving ahead, today my agenda for the next 1 hour is in the lender's perspective, what was pre-IBC era and what change, the new thing it has made, who are the pillars of CIRP, COC, the legal constitution of the COC, hierarchy of reporting, and the expectations of the IBC law as such from an ICOC, the expectation of an RP from the COC, roles and responsibilities. of RP. It's defined in law, roles and responsibilities, not defined so in the COC, but we are just trying to put it based on various studies, things collected by various authorities. I just made it as an unwritten law as of now. And now today, the recent amendment in the liquidation regulations and all, the stakeholder consultancy committee has become an extended arm of COC. Initial 60 days, the COC becomes the SCC and they enjoy the powers. And they continue to enjoy major share of voting in the SCC or throughout the liquidation process. So that I just want to just give what is the powers the SCC has. Just want to have one slide on that. So these are today's brief agenda on that thing. Moving ahead with pre-IBC era, this slide I think in the last meeting itself I have shown. So prior to IBC, what are the recovery mechanism, business revival mechanism, liquidation, dissolution, all those options. So you had various laws, right from pre-British, means the British era to till now, so many laws for partnership, individual companies, everything has come for bankers, recoveries, SIC industries, SURFACE, RDBFI, so many things have come. Then RBI also have come out with so many schemes, S4A, Joint Lenders Forum related, CDR, SDR, so many schemes have been come out, OTS, various internal defined schemes. All these were, government wanted to put an end to all these things and come out with one code to give a gracious exit to the failing business person and put all the assets into productive use. So before IBC, when there was a brief study, about 16% of the industrial and business assets in the country is lying idle across India. Approximately 16% of the assets are lying idle, which has the potential to generate an employment of minimum 2 to 3 crores of employment it can generate. So much of business assets are lying idle for various reasons. Either the working capital may not be there, the business of that particular enterprise might have become obsolete, various reasons. But you see, the capital investment of 16% of the productive asset, it will run into lakhs of crores are lying idle. It's an absolute national waste if you see it. So the objective of this IBC is one is to revive all those locked in assets. The existing promoters may not have bandwidth, may not have working capital to revive that business or to put the asset into an alternate use. Let it change the hands. Let it go to new person. Let him use it for other productive purposes. So be it your spectrum licenses or be it coal licenses or be it factory asset in prime location, residential building, hotels, whatever be the enterprise, if it is not productive, not generating employment in the hands of one owner, and if he has defaulted in debt to the public enterprises or to the operational creditor, let them bring it to insolvency and let new buyer come and take over at a fair value for revival of the business. The loan may be 100 crores, but the worth of the assets may be 10 crore only. So he may be willing to take it for 10 to 12 crore rupees. You can't sit on with the asset stating that it's a 100 crore liability is outstanding, which it is foolish to stick on with 100 crore number. So that is why valuation has been brought in. Historically, valuation is never recognized in the legal system. There is no registered value concept. Now, because of IBC, section 247 of Companies Act has been brought in, means had enforced with the registered valuer concept, and that have become now law. Sooner the valuers bill also may get into act, and all those things are likely to come. So this pre-IBC era, which had enormous act, is now stage by stage getting replaced with one code. It is Insolvency and Bankruptcy Code. Today, literally, it has replaced for the entire corporate sector and for the limited liability partnership firms. This is in the next phase of getting into the personal guarantor, and sooner it will go to all individuals and partnership firms. Down the line, say 8 to 10 years down the line, all these acts, say for example, SURFACE, many things may be removed completely. That time only will test that out. So, sir, we will have one law down the line 10 years to talk. If you want to incorporate, it is Companies Act or partnership law. If you want to exit, it is only IBC. There's nothing in between, no recovery. All those are going to get centralized into one place. And there we, as insolvency professionals, play an important role. Many of today's participants are part of banking system, lender thing. You will have a major role along with the RP to have a successful revival of the corporate debtor who is undergoing the CIRP process. So if you see what has changed for the lenders in the new IBC legislature, debtor in control moved to creditor in control, which I have deliberately explained to you. Second major thing, comparing to the erstwhile Companies Act and the liquidation and distribution mechanism, the priority of distribution underwent a major change. That's one more important change that facilitated the bankers to come to this IBC law. Earlier, the crown dues had the priority than the secured creditors. Government, by enacting the IBC law, government have made their own dues subservient to the financial creditors. So, conscious call taken by the government to ensure better entrepreneurship and business revival. They said that our tax dues can go down. Let the business revival be the first priority. Employment generation and all the commercial activities to flourish. So that's a conscious call of the government, and it's a welcome approach, which is an universally accepted. All the developed nations are already into this particular regime, and now we are marching towards the developed nation status down the line, a few years down the line. So we will also have, our government has also adopted that priority change, and now priority in distribution, like any other laws, employees retirement benefits are given some exclusive rights, which is separate. Leaving out that, the CIRP and liquidation costs, then comes immediately the secured creditor benefits, followed by the unsecured financial creditor benefit. Then only government comes into the picture. So the crown dues taking a backseat is again a big welcome change for the lenders who are bringing the matters or defaulting matters to this insolvency process, and they are getting better paid off in this process. The third major change is the commercial wisdom getting a judicial stamping today. Earlier, if bankers have given OTS, they would have gone through some inquiries and all those things. Today, if at all, if it is properly approved through a resolution plan, through an adjudicating authority, they are getting a judicial stamping for their commercial wisdom in deciding on some of the revival options of any of the corporate debtors. So that's these three, in my opinion, are the key changes which makes the bankers, lenders, okay, one side to some extent operational creditor, but mainly the financial lenders who are putting their money on the business for means promoting entrepreneurship, they are getting these advantages under the IBC regulation for better recovery of the assets. So India had very poor recovery rate in case of insolvency in the historical, it is less than 26%. Now, if we want to make our recovery rate closer to 75% plus, the IBC is the best suited at current point of time, and the role of the RP and the COC are most crucial one in ensuring the best recovery in that frame. So this is the new window available for the lenders under this new era, and the law is set in motion now for all of us. Moving ahead, corporate debtor, we said the revival, RP and COC has to work in tandem. They have to work together seamlessly. And if you see it, the success of a corporate debtor in the CIRP process for revival, in my opinion, there are 4 pillars to it. It's RP, it's COC, one side adjudicating authority, and finally the resolution applicant. If the CIRP has to be successful, obviously the resolution applicant has to take over and revive this enterprise. These four pillars are the most crucial for success of any CIRP process for revival of CD. We all would have known for IBC success, there are 6 pillars. One side adjudicating authority, IPs, IBA, means IPs, IPA, registered valuers, and adjudicating authority. All these, some 6 pillars are told everywhere for success of an IBC, the code as a whole. When you drill down at a micro level, so those things are at macro level. When you drill down into micro level of a corporate debtor for revival, the 4 pillars are resolution professional, committee of creditors, adjudicating authority, who is the judicial decision-making body. The committee of creditors are the commercial business decision-making body under the CIRP process. The resolution professional is the managerial person who is on the field to manage the CIRP process, to manage the corporate debtor as a going concern. And the 4th is the new entrant, the 3rd party who's coming and who's ready to take over the company and revive it, who's a resolution applicant. So this particular resolution applicant is not one person on the day one. It may be PRA, means prospective resolution applicants may be multiple in number. Some cases you may have only 1 or 2. Some cases you may have 20, 30 applicants, prospective resolution applicant. Finally, you might have 5 to 10 plans in table to evaluate and choose the best one. That's where the resolution applicant, the choice of the resolution applicant, the plan is entrusted on the committee of creditor, and finally it goes to the stamping of the adjudicating authority. It's a process where these 4 pillars have to work in tandem. Okay, adjudicating authority never works with us in tandem, so they are a separate league. They are finally going to review our decisions and going to approve it up. The resolution professional, committee of creditor, and the resolution applicant who is finally selected to work in tandem to ensure that the corporate debtor is revived and the employment of the existing employees are continued, the business continues, the entire asset of the corporate debtor is put into active use for the benefit of the nation. So these 4 pillars are very crucial in that. One is committee of creditors today. That's what our main objective of discussion. So as committee of creditors, what are our roles? What are the expectations of all the other 3 from us? And what are our duties and responsibilities? So that's we are going to see in the subsequent slides. Okay, before getting into the rules, responsibilities, roles, and all those things, I just want to give the statutory structure of the committee of creditors. Obviously, since this is an IBC law, all those matters are already come under the court's purview. Everything is by the law. So now, how committee of creditor come into picture? So section 21 of the IBC is the guiding section where the COC gets constituted, where interim resolution professional who's having the powers to do that on the first 30 days, he collates the claim. He collates, in the sense he makes the public announcement, receives the claim and verifies, and he constitutes the committee of creditors. The committee of creditors, either it can comprise of financial creditor, or if there are no financial creditor, then it will be it's a committee of operational creditors. The operational creditor constitution, I have another slide to show what is the numbers of the peoples. So under section 21(1), the committee of creditors get constituted. In case if it is financial, even a single financial creditor is available, then it is a committee of financial creditors only. And here, if it's a related party, they cannot be member of the committee if the financial creditor is a related party. You know, in balance sheet, many times you will see unsecured loans from the group companies, directors, promoters, are their relatives. So they are all not part of the COC, and they will not have votings. The financial creditor who are unrelated will be able to participate, will have voting in that things. And consortium members, if they are there, all brands can become member. So these are all, each of the subsections in the statute, it is defined there. Some minor clarifications are also there in the statute, where some, in some cases, one FC, the banker, maybe a financial creditor also, or the operational creditor also. In such cases, the operational creditor, he will not to have voting right to that extent. That's a separate. He will have voting right to the extent of only the financial creditor, the financial debt, wherein the money has been given, means considering the time value, and there is a proper loan agreement, and all those things are there. If there is operational debt is assigned to any financial creditor, say for example, some party has discounted some bills with the bank, that bank cannot become a financial creditor because he has discounted our company's invoices for a third party. So to that extent, he will be an operational creditor, and he will not have a right to participate in the COC process of the CD. So this is briefly on the Committee of Creditors Constitution. Under the same section, if you see, based on that, there is a regulation wherein operational creditors who will constitute the COC in case there are no financial creditor. So it's a 20-member committee in case of a COC being constituted with operational creditor. So it is 18 largest operational creditor. Don't ask me if you have only 10 operational creditor, what to do. It is whomever is available, it is 10. If it is 10, only 10. If you are having so many numbers, then 18 largest operational creditors, we will take it up. Then one representative from workmen and one representative from employee side. Even if their debts are high, for example, they are also operational creditor in one form, and if their values are high, and if they are already part of the 18-member team, then you can select the next highest person in the workmen to be there to represent that. All of them will have their voting right to the extent of their debt on. That's how the COC constituted with operational creditors come into picture. Now comes hierarchy of reporting and responsibility in insolvency and bankruptcy code. You know, once the CIRP commences with the order of the court, either based on section 7, 9 or section 10 petitions, the resolution professional, okay, in that case, interim resolution professional take charge. So we will invariably use IRP, RP. Both the things will have same context for us for this discussion with this particular COC. So now the resolution professional takes charge, and he means the IRP constituted a COC. So they will be the supervisory body on the RP, and the final key matters like resolution plan or any other extension related, exclusion related, wherever the litigation matters, that goes to adjudicating authority for their approval. In that structure, if you see, the managerial job of the CAD rests with the resolution professional. He will take control of the asset, take complete custody, and he will ensure compliances, ensure that company is maintained as a going concern, and he will ensure appropriate compliance with the requirements of IBC and all other laws applicable to the company. So he is the person, de facto MD or CEO, whatever we call it. He is the person interested with management. So he has to apply all his managerial wisdom in administering the business and administering the CIRP process as detailed under the IBC code. The next layer, the supervisory body for the resolution professional, the committee of creditors, where the lenders are sitting. They are interested with the commercial wisdom, the financial and related commercial business sense. The commercial wisdom is the responsibility of the committee of creditors. They are the store with the power and responsibility for all the critical decision making for revival of the corporate data, which includes engagement of additional professionals, giving interim finance for continuity of the business, including fees payment to RP, all those things. The committee of creditors are empowered with all the powers, and they are the people who will facilitate, fund, and take decisions for revival and the smooth functioning of the CD. Finally, is the judicial wisdom, where the adjudicating authority plays their role, who are there to uphold the law, whatever be the decisions taken by the RP or the COC in the context of law, in the fairness of the business and fairness of all the parties, stakeholders involved within the purview of the law. They will be finally dictating their judicial wisdom. This is the hierarchy, although not completely specified in the same context in the code. In practical sense, the three levels of wisdom: the managerial wisdom, supervised by commercial wisdom of COC, finally the judicial wisdom of the adjudicating authority, drives this entire IBC process. The success of CIRP flows in this three-staged wisdom. Moving ahead, which I have already told in various words in the previous slides, we have to work, means the RP and the COC have to work together seamlessly, which is a prerequisite for success of any CIRP. And to be successful, there are other important factors where you require the support of the erstwhile management. One side, if they are MSME, they will try to come for taking over it, so long as if they are not disqualified under Section 29A. Other side, if they have completely detract, they can get a gracious exit provided they cooperate with the RP, facilitate all the requirement data and all, assist the company to maintain under going concern, the support of existing employees on the roles to facilitate, to keep the entity going concern, because keeping the entity in the going concern mode very important for better realization for all the stakeholders concerned. So that crucial support from erstwhile management will be of a great help, and the existing employees, if they assist the RP in continuing that going concern, that's important. Finally, the judicial orders, whatever we decide, whatever the COC decide, if it has to, the revival has to be meaningful and the revival has to be appropriate for that particular business, the judicial orders also have to flow in time. All we say is 180 days timeline for CIRP. Maybe depending upon the complexity of the case, another 90 days, 270 days CIRP process. Followed by it, if the judicial orders come within another 30 to 60 days, the entire process will be meaningful. We had bad experiences due to lack of adequate judicial members, technical members in the judiciary, due to which there were time lapse. Due to that, many resolution plans have failed in implementation. So that is also a crucial factor for a success of IRP. Many representations are made to even judiciary itself, to the central government, to IBBI, for ensuring that all the adjudicating authority benches are fully manned adequately, so that all the judicial orders come in time. So that is a continuous process. We have a limited say in that part. We can only say our grievances in that leg, but otherwise that is one requirement for success of an CIRP process. Moving ahead, the insolvency and bankruptcy code expectations, RP's expectations from the lenders, from the members of the COC. What do we expect from them? Well, actually, these are the questions which are raised in an IIP ICAI's study group. Thanks to the study group who have floated these things, taken opinions, all those things. Credit to them for, I'm just taking these questions from their book. Whether COC is assisting the RP by giving timely decisions. That's most important. You know, although the IBBA has come out with a circular that only the decision-making person in the bank should come and attend the meeting. They should not come and tell that I don't have a power to decide, I have to go to my appropriate authority. There is a proper guidance from IBPI circular to that extent. As RPs, we mentioned that particular circular references, that notification reference, even in every notice we send. But, bankers have, it's an institution, it's not an individual person. Obviously, they will have some reporting hierarchy, decision-making hierarchies. But given that limitation, whether they are supporting the RP with a timely decision, it may not be across the table during the meeting. But if we put it for e-voting, which will run open for 2 days. See, we may open up the e-voting 1 or 2 days after the meeting, and then we will keep it open for 2 days. Whether COC facilitates the RP by giving that their decision in the timely fashion is the most important expectation of RP from the COC. Second, if you see, if the company is in a stress, already the bankers have lost their money. So bankers always had a question, why do we need to spend to run this IBC process? And why do we put our good money behind, means chasing a bad money? These are all regular questions which you will come across from any bankers, whoever is attending the COC. So they always drive you to do a lot of cost-cutting measures, reduce the security, reduce this thing, reduce that expense, don't do that. Means don't appoint a high-cost valuer, try to put some 20,000, our panel valuer who will be ready to do it for 10,000, 15,000. They will suggest you to put for a low-cost lawyer, don't engage senior counsel, lawyer fee, various cost-cutting measures they will drive you. Is it consistent with the requirement of COC? Requirement of IBC. See, the objective of IBC is to revive the enterprise. So for that, this particular cost-cutting measures, are it consistent with that? Or in the name of cost-cutting, we are leaving the enterprise to completely perish. That's another expectation from COC. IBC also wants the COC to apply their commercial wisdom at that point. What is appropriate in terms of approving the cost or for the revival of the enterprise, which has to be seen. Third, and the most grudging problem for many of the RPs is the replacement of IRP or RP by the COC. Do they do it in a transparent fashion? See, there's nothing wrong in COC having an authority to change it. There may be problems where people will have difficulty in the competence of the person to manage a particular industry, particular city. There are some cases when the cases are admitted under CIRP through Section 9 petition, the adjudicating authority doesn't go into the list on the basis of the ability of the person, the strength he has to team availability and all those things. They go by the list in the order of things. He doesn't have a case, his name is put in. But if you are giving a going concern enterprise, which has some 100 crore turnover, and you require 25 professionals to be deployed on day one to take over the thing, if you give it to an individual who doesn't have a setup, it will become a disaster. Obviously, the COC will have a big difficulty in that process. Obviously, they will try to replace him with a person who has experience and adequate infrastructure to do it. But the most important thing here is, are they doing it transparently? Are they giving free and fair opportunity to all the peoples, including the IRP, to participate in the in the RP confirmation process or on the new RP appointment process? That's transparency is another big expectation of RP from the committee of creditors. Next comes timely support from COC for appointing professionals. It means in my smaller cases, every RP has a problem when they appoint the professionals like valuers and all for carrying out the thing. See, valuer appointment is a discretion of the IRP. the valuer appointment is not under the purview of COC. But the money, fees payable to the valuer or the lawyers, it is all the COC have to pay the money. So COC, they say, no, we will pay only 20,000 as the valuation fee, we will not be able to pay more. The RP is constrained. See, if you want a qualitative work, whether as an RP, whether as a valuer, whether as a lawyer, you have to pay appropriate price for it. You can't, when you want to have the services at a cheaper cost, you may not have the services of the best quality. The services also may be cheaper. So there, again, the cost cutting should not spoil the CIRP process. So appointing professionals and paying them appropriately, not royally, it's more appropriately if you want to pay. That timely support of COC will be very crucial in that. Same way, timely support of COC in avoidance transaction, clawback transactions. So you require a lot of data of historical things, bankers, references, banker documents. And today, you know, the latest amendment of CIRP, the bank has to furnish so many of their old records, whatever they collected from the CD to the RP, so that he makes a complete information memorandum for any potential investors to evaluate the CD and give a resolution plan. So the COC has to collate and means from various informations, whatever they had, they have to collate and give it to the RP in time, which will facilitate him one side for IM preparation and take it forward. Another side to ascertain avoidance transaction or clawback transactions. And when the matters comes up for discussion in the COC also have to look into the matter. They also have to assist the RP, whether the requirement of appointing a transaction auditor depending upon the complexity of the case, or appointment of a forensic reviewer to carry a complete forensic assignment of the entire thing. So all those places, COC has to look into the matter in a reasonable and fair manner and support the RP to carry out the means a review of the PFA process, transactions. So that's another expectation of our RP from COC. Then comes arranging interim finance. So obviously, the purpose of IBC giving the committee of creditor power mainly to the financial creditor instead of operational creditor is that when it comes to funding, to manage the process, to keep going, the existing thing to keep going until it is resolved. Generally, operational creditors will not fund. Generally, operational creditors may be individuals or the partnership firms and business enterprises. They will not have wherewithal to fund for already ailing enterprise, means a business enterprise. So there, that is why they gave the power to COC, the financial creditor, to preside over and provide financial assistance to keep the CIRP cost means process going, to ensure that the going concern of the entity is maintained. So COC have to take appropriate decisions on these interim finance matters, whether they themselves will fund it, or if there is an unencumbered asset based on which you can pledge and take an external finance for running this entire CIRP process. Those decision-making powers are with the COC. There means timely support, timely decision-making on a reasonable basis for that appropriate cases. Another important crucial expectation of both the law as a whole and the resolution professionals from the COC for keeping the CIRP in a successful way. And whether in another last expectation is whether infrastructure available to make the decisions. Means the data management, the communication. Sometimes we have a practical difficulty in communicating with the COC itself. You know, the practical difficulty comes in even sending mails. You know, the bankers, when you try to send some attachment, it won't go, your mail get bounced. Bankers have big limitations in receiving mails from third parties. That you have to discuss with them, they have to permit you to send the details. And if you want to do a meeting, online meeting, their system doesn't allow them to participate in the Zoom. They have to have some external non-bank infrastructure computer separately. From that only they can attend the Zoom meetings and all those things. So there are various nitty-gritties in the data management, data flow, communication flow with COC. All those things, the COC how to work with RP, facilitate to him also, and by extending that whatever internal inside modification, so that the communication happens seamlessly, the data are transferred between the parties seamlessly. So, for example, I have to share the information memorandum to the CII, means to the Committee of Creditors. So I may host it, I may send it through email, or I may host it in a Google Drive, or I may hire some ethos database or something, and I will put it there with access to them. But sometimes bankers will say, we don't have access to it. Please give it to me in pen drive. These are practical situations which come across to us. So that the integrity means micro level support, the COC have to make themselves available so that IBC process, the RP also carries the CIRP process in a comfortable manner. So these are all in brief the resolution professionals' expectation from the Committee of Creditor, mainly the lenders, and even the Insolvency and Bankruptcy Code also wants the COC to exercise their commercial wisdom in a timely manner, means most suitable to the particular given case in hand. That's how collectively we all can make the CIRP a successful exercise. Yeah. Moving forward, okay, many of you are IPs and some bankers are there. I just tried to list down the roles and responsibilities of IRP and RP. Sorry, this is some repetition of many of my presentation slides. So as an RP, I have two roles. I'll be having the managerial wisdom to run the enterprise. So one side I have managerial responsibility, another side I have a procedural responsibility to comply with the IBC provisions, starting from the public announcement and ending up the complete implementation of the resolution plan. My procedural role flows through completely, which are all defined in the code, IBC, and followed by the regulations, circulars, so many forms reporting in the IBPA portal, reporting to IPAs. The different IPA has different kind of their own portals for taking their progress reports, half-yearly reports, and all those things. So there are a lot of procedural responsibilities are cast on IRPs and RPs, constituting the COC by verifying the claim, admitting, hold the COC meeting, prepare information memorandum, invite resolution plan, make the PRA provisional list, final list, conduct 29A due diligence reviews for any of the prospective resolution applicant, provide them with information memorandum, RFRP, define an evaluation matrix, take the concurrence of the COC, get the plans, review the plans in the context of the compliance as required under IBC code and its regulations, convince COC, negotiate with the RA, bring them together and strike a price and the terms so that the resolution plan finally gets approval of the COC with adequate majority. And in case there is a descending financial creditor, how their portion of the liquidation value is assured. All those procedural aspects of the law is a big responsibility on the RP one side. It doesn't end with that resolution plan approval. Then he has to collate everything, submit to the NCLT, and NCLT are taking longer time to review this entire thing and approving the plan. In that process, they may also ask you for many things, which you will furnish on time and get that case moved up faster and finally decided. After the plan is approved by the adjudicating authority, as defined in the plan, constitute the monitoring committee, conduct the monitoring committee meetings, get the plan, step-by-step implementation done, and complete the thing. There's a procedural aspect. In every aspect, there is a responsibility cast on the COC in making decisions. Because many things require decision of COC. Another side, managerial aspect of the business, taking custody, managing it, the going concern, make the cash flow plans, means negotiate with the employee, with the lender, with the suppliers, with the customers, see that the cash flows are maintained. You have to do the complete role of a CEO or CFO, any CXO roles. Although there, it may have people, it may not have people. You might have to, with the concurrence of COC, you will appoint experts to facilitate that. All those things are all managerial responsibility cast on us. The life of an RP is completely, means it will be a messed up thing, but it's all defined. But when you are managing 1 or 2 live cases, obviously the journey with a lot of hurdles, and that will test your experience, your knowledge, your ability to manage the things, and you will come out successful when you are able to resolve it with a good resolution plan and its implementation. Under section 28, which says what are all the matters which requires prior approval of COC, where you can't, the RP cannot do, means you do it first and then go and get it ratified. There are about some 13-14 matters listed down in the code where you require prior approval of it. Without prior approval, if the RP is doing that particular task, it's void. The COC can recommend such actions to IBBA for disciplinary actions. Some exceptional cases, such representations or recommendations have already gone to IBBA also. I just try to list down those matters. I'm just going to read it out for information of the lenders who are members today in this thing. Starting from raising interim finance. If you have already specified a limit, say for example, up to 1 lakh, you can use this limit and do it. You want to go above, then you have to take an upfront approval. Make changes in appointment time of auditors, whether it is a statutory auditor or an internal auditor, you require prior approval. Make changes in appointment terms of specified personnel. So if the COC says that these are all the key managerial persons who will be, we ourselves will be monitoring, then if at all you wanted to change their terms of engagement or anything, then you require their prior approval. Maybe down the line you can sack people, you can hire people, that will not be a problem. But if the COC decides some key people's, if at all you wanted to change their terms of appointment, any modification, then you require their approval. Any contractual rights or debts which are material. See, it's not the question of 1,000 rupee contract. If it's a crores and crores of rupee contract, if you want to make any transfers or its rights or debts to be transferred to another third party, again you require prior approval. Any change in the management structure, any director changes, or you wanted with director changes including subsidiary, you wanted to do it, all requires a COC. See, whatever matters which earlier board of directors are supposed to decide, all the things will come on the COC to decide, including share disposals. If at all any share transfers, share disposals, generally everything goes to BOD. Same way it comes to COC for an approval. If RP needs to delegate his authority to somebody, maybe I see one RP cannot, if the company has multiple places operations and all, RP cannot have presence everywhere. Some of the bank account requires operation by the team of RP's team members. Then those operating rights, you should take prior approval of the COC. Amend the constitutional documents. If you want to make modifications, sometimes statutorily, government or some authority will require you to modify this particular clause if at all you wanted to continue with that thing. So if you want to make any constitutional document amended, then you require COC approval. Undertake any related party transactions, you require prior approval. Giving instruction to financial institution for debit transactions. See, generally in the first meeting or second meeting, you will say up to 10,000 rupee or up to 50,000 rupee, we will incur the expenditure. The RP is empowered to approve. Beyond that, you require prior approval of COC. So wherever you have such kind of limitation and you wanted a debit transaction beyond that specified amount, then you will seek the prior approval of the COC. Record any change in the ownership interest. Some owners of this particular sheet, their shares are getting changed to a third person, or any changes that happen. Generally, it comes to BOD. Same way, it comes to COC here. Changing the capital structure of the company or create any security interest. All these transactions, approximately 13 in number, which are enshrined in the law under section 28, all these requires prior approval of COC by way of 66% voting right and the total. It's not members present and vote, 66% of the voting share of the total COC. Okay, so this entire COC, because it is entrusted with the bigger responsibility of key decision-making powers, and the knowledge of the IBC is spread less in the initial days among the lenders community, even among the IPs themselves, where there is a big understanding difficulties in that. In 2019, IBPA came out with a guidance circular where they have, based on each of the regulatory requirement, they made a charter of responsibility. IRP and RP, what is his responsibility? What is the responsibility of COC? Who is supposed to do what, and who is the approving authority for that? And where the IRP has to do, which requires then the subsequent approval of COC. Where IRP or RP will do, there is no requirement of COC approval. Where COC themselves have to do, there is no role of IRP or RP. They try to list out. Okay, the IBB has not updated this particular list. 2019 it came. Minor one or two modifications have come because of the subsequent amendments in the regulations. Otherwise, the list is fairly comprehensive one for all the RPs. On the other hand, the COC also to keep this. And I always advise all the insolvency professionals, when you take up the assignment, be the whoever be the lender, please discuss this particular list with all the COC members in one of the COC meeting or separately, or with all the COC members. You please discuss this so that the roles and responsibilities of the IPs, resolution professional, we are clear by ourselves, and we make the COC also more clear about their roles in this entire CIRP process. This is a document which is readily available. Maybe the newly qualified IPs might not have update of that particular the 2019 circular, which is available readily in the IBBA portal. Please go through it. I would suggest this is discussed as one more agenda item with the COC, either in the first COC meeting or second COC meeting, to ensure that there is a transparency in understanding the scope of work, the scope of decision making, the decision making powers of between the RP, between the COC are all clarified, are made black and white. So there is a document readily available. I would request you to share it and discuss it out. So there is a clear thing, IRP, what are all his duties? It's all that the green color, all what is he supposed to do, where COC doesn't have a role. And wherever there is a voting right, say for example, confirmation of IRP as RP, IRP doesn't have any role to play. Their role starts for the COC only, and with 66% voting. When it comes to a withdrawal, both the parties have to play a role, and there is a 90% voting requirement. For example, ratifying an expense of an IRP, it is 51% voting right. So it's a decision making of the COC. Nothing is the role of RP. RP will only state the financial expense of whatever he is stating. So like that, there is a clear-cut, well-defined document available for an IRP or RP, one side, on COC on the other side, to understand their duties and responsibilities and take forward. So if they are well versed with this now, you don't have 99% of problems creeping in. Because it's a very clear document where roles and responsibilities are black and white clear to everybody. And if the COC is clear about it, then they will not ask you many questions. They are very clear with this. So I would request as an RP, share this document with them. They may not have gone through these things. Share it with them so that they are clear about their roles. So this is the first table comprises of IRP's phase, that 30 days phase, then followed by second table. There are two slides, wherein RP's role, which technically starts on 31st day, or 47th day, or something like that, and it runs up to 180th day or 270th day, or it may go to 330th day also. So individually, the responsibility of the RP, the COC, and what is the voting right required. Anyway, I will be sharing this presentation with your people and you will get it. But otherwise, refer to the 2019 circular. I have given the reference of that particular circular also in the subsequent slide. So you take that, have this in Excel, and you can have your own tracking based on this, and share it with the COC members. They'll also be up to date on this roles and responsibilities. This is third portion of the table. Again, RP, what is his role? Where you can see that section 28, where COC things, where mutually IRP and COC, both of them have a role to play in that place. And that's it. This is the end of it. And which is okay. So 2018, various circulars have been issued. Finally, in 2019, everything is compiled in a table structure and made available. The exact reference of the circular, I have given it in the last slide. In 2019 circular. So this one, I urge all the insolvency professionals to share it with lenders forum, the COC, and see that we are clear on our roles and responsibilities, and we work together for success of a CIRP. Yes. Moving ahead, I have already said what are our expectations. The code doesn't specify the code of conduct for the RP, means for the COC. But, for making it successful, the COC has to have their own code of conduct. The roles and responsibilities are not defined under the law as such, as it was defined for the RP or IRP in the code. But today, the success, all those successes, whatever we see in the CIRP matter, the unwritten law which is in practice, the more this gets implemented strongly, and it is in the spirit of it, the whole COC and the RP follow, the CIRP success comes. The first and foremost is the transparency in conduct of the COC. The COC members come with hidden agenda. As an IRP or RP, we can't do anything. If they have already out of the way discussions with the promoter group, or with or they are biased on one resolution applicant and all those things, then we are, we can't go in a very smooth way. We will have absolute difficulty in managing it off. So the transparency of the COC in conduct of the meeting, in conduct of managing various decision-making processes, that is very, very crucial. Where I mentioned it at the point of conflict of interest. See, sometimes the promoter group would have come and given some offers. There can be some discussions may be going out of the way. With that hidden agenda, if the COC sits and discusses, then we will be at difficulty. Whenever there is a conflict of interest, the COC has to be very transparent so that the entire CRP goes in a fair manner. And all the decision making of COC, if it is fair, if their commercial wisdom is demonstrated in a fair manner, the RP's life will be smooth. Yeah, he will have so many reporting responsibilities, so many jobs to do, but he will have comfort that I am backed by my COC. My reasonable decision making, my fairness of decision will be supported by the COC. That comfort he will have. So that is one first prime unwritten law we expect the COC to demonstrate in this CIRP process. The second, if you take it, arm's length transaction of COC with RP. COC and RP, if they collide, then again one more disaster will happen. You may end up making the enterprise fail, or the process may go biased. The COC shall maintain arm's length with RP in matters of jurisdiction and responsibility. It's not that the COC they will decide and they will tell the RP and RP will do it. RP has to do his role of preparing whatever his responsibility and given it to the COC for decision making. It should not be the reverse way. COC should not decide by themselves first and then tell, okay, RP, you do this. You should put this as agenda item, we will approve like that. Then that is not a fair way. So the COC should ensure that they are maintaining arm's length with RP. RP is given adequate freedom to operate his responsibilities, his jurisdiction of activity, his choice of selecting the professionals for doing it, his choice of carrying out the avoidance transaction, audit, whatever it is, that the arm's length maintenance will be very, very crucial for free and fair conduct of CIRP process and making it a successful. And third important task, when the selection of RA goes, COC should ensure with their backed up infrastructure and all those things, proper due diligence. Sometimes the insolvency professional will have a limited infrastructure to carry out a due diligence. If you want to have a clear due diligence, even the RA will be present at some other jurisdiction. He will have some other, he will be operating with some other banks. But the banks, through their acrylic infrastructure, acrylic reporting things, and various other things, they will have a first-hand report of the RA than the individual RP. So there, the RA's the due diligence of the RA, CD means who is submitting a resolution plan for the CD, the COC has a bigger responsibility to ensuring a proper due diligence of that, because selection of the RA is very crucial for success of the revival process of the company. If we end up with the wrong person or incompetent or means not having adequate net worth person, then finally the resolution process will fail. And end result, you will get into liquidation, which is not the objective of the court. So due diligence of RA is very crucial. Although the RP will do to a greater extent at his end, the COC, who are the decision-making body, are entrusted with that responsibility of due diligence of that RA. The fourth important thing, the lenders forum, who are part of the COC, whenever there is a deadlock arises, they should have defined among themselves a mechanism to resolve. See, if the voting stands at 50-50, the poor RP can't do anything. See, many times when there's a forum of, if there's an absolute majority with one or two people, and if they vote, somehow case progresses. But wherever there is a multiple lending, it is that people sit in the meeting with 10% voting, 12%, 15% now. See, it always requires 4 or 5 members coming together to approve a resolution. And if there is a difference of opinion among the lender, and if there is no 66% voting for any of those resolutions, what this poor IP can do? He is stuck. So the COC should have their own internal mechanism among them. If at all a deadlock arises, how they will decide to see that the CIRP goes in a free and fair manner. So that one more responsibility on the COC. See, all these are not codified under the law, unwritten things, but it is the responsibility of the COC to ensure the success of the CIRP. Some more continued unwritten laws, if you see, timely disclosure of all the information to the RP. Now there is a bigger duty cast on the RP in terms of preparation of information memorandum. If you have seen the information memorandum requirement as per the new amended regulations in the last 3rd, 4th and 5th regulation amendments in CIRP, almost you have to prepare a set of document which is complete for due diligence of an enterprise. And if an investor comes in and if he invests, what are all the documents you will ask for a fair due diligence of that enterprise. The whole set you have to prepare it. You have to, thank God that they have extended the timelines to 95 days. But the preparation has to get completed. If the management is supportive on one side, to a greater extent it is possible. If the management, the SOL management is not in favor or not in bigger support to the RP, his life is miserable. In that place, the financial lenders who are members of the COC, who would have got all this information over the years from the promoters when they started the lending and during the course of all those things, they have to collect and give this information to the RP. That will be very, very crucial for RP in ensuring a proper information memorandum so that the prospective resolution applicant have a fair information available on the table for drafting a good resolution plan on that matter. That's another important responsibility of the COC, followed by following the timeline. COC, it is not only the responsibility of the RP to follow the timeline, it is the COC who has to support the RP in giving the timely decisions, participating in the meeting. If the quorum is not there, if meeting is adjourned, what to do? Or many times we call up the bankers, if they are saying this reason, that reason, please shift the meeting, please postpone the meeting. The poor RP will be struggling. So the COC has to help the RP in ensuring the timelines are adhered to in word and spirit for the entire success of the CIRP. Then the next most important role or responsibility of the COC is to send to the meeting a competent, professional, and an empowered person to the COC meeting. A person who can come may not be, he will not be empowered to decide on the plan immediately on the table. But if he is competent and professional to share his views, have a healthy discussion, and raise appropriate queries and get it clarified. Yeah, if a competent person is nominated to the COC can run in a free and fair manner and it will be productive. And he will also can go back with correct set of information to put up for approval with the authorities. If he goes in a half-handed way and finally we had come across scenarios when some things are going up for approval in their organization, a set of questions come from their top management to those persons who attended the meeting. What he does, he immediately forwards all those things to the RP. Please help me out with answers for this, because my senior management wanted answers for all these queries to approve this resolution. As an RP, I request the COC members to send competent people. If they can, if they collect all this information during the COC itself, where other members are also will aid, where other professionals who are attending also will aid for complete, comprehensive discussion of all the matters which are tabled in the COC for discussion. And wherever possible, if they are empowered, they can give decision across the table. Wherever key matters which can go for approval, that also can be speeded up if the person involved in this process is competent. So sending a competent and professional and empowered person to COC is one more important task and responsibility of any COC member. And the last but not the least, wherever there are large resolutions, COC should see that they are engaging adequate professionals to ensure there is an heterogeneous composition. See, when matters of 5,000 crore, 10,000 crore and all are dealt, where the company has varied businesses and with different geographical presences, obviously the RP or the person who is representing the COC will not have adequate knowledge on all the business segments, on all the market segments, on deciding or looking into the values, the credit risks, the compliance matters, and the ability to conduct the business, revive the business. For all those things, you require experts. So, depending upon the volume of that particular resolution, if it's a very large, COC should ensure that adequate experts are engaged, so that there is a heterogeneous composition to have a fair and detailed discussion, a multifaceted discussion on all the aspects in any in the COC meeting, so that the decision making becomes a well-informed, well-discussed thing. And when they go back to their seniors for approval, they will have complete set of information on their hand to present it to their senior management for taking approval. So this is one crucial thing. Depending upon the size of the case, COC has the power to engage all the experts. So that COC should look into the size of the case and see that. See, in this process, I have listed down some 8 roles and responsibilities of the COC. Although these are all not codified under the law, except that COC can decide this like that. But it is not that a code is defined. What if COC doesn't decide? You can't penalize the COC. Nobody, the court doesn't have power to penalize the COC or put any penalties. So that they are a body who are entrusted with biggest responsibility, but there is no accountability under the law. But the accountability of the COC is most crucial for success of the CIRP. The unwritten law, if the COC is able to follow it in spread, any CIRP case of CD can be transferred into a successful assignment, and we will be able to get resolution plan and make it a successful journey for RPs and the COC. I think that's it on the CIRP side. And I just want to have the last slide on the COC. If we are not getting any successful resolution plan, obviously it ends up in a liquidation as a consequential thing. Today, the recent changes have made that the stakeholder consultation committee comes into picture on the day 1 of the liquidation itself. And the COC, the composition of the COC, as it is get transferred into stakeholder consultation committee with same voting rights. But the powers of the stakeholder consultation committee is much different comparing to the COC during the CIRP process. They are more of an advisory role, except for some key decisions like appointment or change of liquidator and all. They are the decision makers in determining the fees of the liquidator. They are the decision makers. Other than that, appointment and fees of other professionals, carrying out the valuation of the, discussing on the valuation aspect, manner of sale of the CD's assets, manner of dealing with profit transactions, post completion of the liquidation, how that has to be dealt. All these are matters which the SEC will discuss and advise how the liquidator has to take it forward. It's more of an advisory thing because the liquidator has an overriding power with appropriate reasoning and intimation to board and the adjudicating authority. So the COC, if the CIRP is unsuccessful, the COC has an equivalent role as an extended CS, stakeholder consultation committee members with significant voting rights to make or to ensure the maximum realization out of the assets of the CD, so that all the stakeholders in the entire thing are benefited to the best possible extent within the purview of the IBC. With this, my presentation for the day comes to an end. I think I have fairly taken about an hour or so. And I just gave the reference of where I took all the related study materials which I have presented. See, today, whatever I have presented, it is not the original work of mine. It's a collective work of many study groups, some expert authors, and IBBA reports. I just added my comments and views in each of those things. So anyway, I am sharing this presentation. As I said, the IBBA facilitation letter, not 2 of 2019, I urge all the RPs to share it with the COC members, discuss each aspect, define your roles and define their role, and take forward the CIRP smoothly. See, the more you communicate with the COC, the more you make your CIRP handling transparent with them. It will demonstrate that you are knowledgeable, you are skillful in handling the thing. And if you are able to demonstrate it, I will tell you, none of the bank will propose to change you. They will continue to work with you till the entire CIRP process. Wherever we demonstrate, wherever there is a shortcoming in demonstrating these things, they look for another IRP or RP to take over it. So it is in our hands to see that we make, along with the COC, the entire CIRP process successful. Anyway, I'm sharing this presentation. You can get it from Vinod and team, and you can go through all these things in due course. With this, my session comes to an end, and I'm open to answer your queries to the extent of my limited knowledge. So
Thank you.
Stop sharing.
Thank you, sir. Before you are addressing to the answer question, a couple of questions we would like to take it up on a different fashion. Mr. Ramana Reddy, while we are reading the IBC, do you think that we will be able to visualize all these things what Suresh was speaking about? Mr. Ramana Reddy, you are not muted. You are muted. Please unmute. Mr. Ramana Reddy, you are muted.
Yes, sir.
Yeah.
Sir, the presentation is excellent, sir, and really it is helpful, informative. It is excellent presentation.
Yeah, Mr. Puranik, how do you think all these things are available in the rules and regulations and all those things? And unless we are not getting the assistance of experienced person like MSK and all, do you think that the people IPs who are so-called trained and all those things able to manage all those things? Mr. Puranik?
No, sir. Actually, it's a great learning from our Suresh Kumar sir, because actually he has got a lot of practical experience. Because unless we have practical experience, we will not be able to deliver. So actually, whenever there is any issue, these practical experience, these are very handy. These tips are very handy.
Yes.
So thank you, Suresh sir, for your enlightenment.
Yeah, this is what I used to fight with my IPA. I literally said, whatever the program you are conducting is not giving any insight for us to do what it is. Okay, I was many times discussed with them to have people who are acute to explain all those things and all those things. Well, they are not doing, we are doing for the benefit of our IP people, whosoever our member or non-member, whatever it is. Now the platform is open for the open discussion of few questions back to the members and viewers.
Yeah, I've shared the presentation in the chat box. You can download here itself, whomever you wanted it.
Thank you, sir.
Yes.
Or to the member for any doubt, clarification, etc.
Sir, I am Selvaraj. Mr. Suresh Kumar, I have one doubt. In the liquidation, when COC is for, will be the SC for 1 month, 30 days or 60 days you have mentioned.
Yes.
In the liquidation, who is powerful? Who is having the authority?
Sir, absolutely, the liquidator and their immediate boss is adjudicating authority. SCC
so
is
SCC is only advisory committee.
Advisory committee. But remember, SCC has power to change you. SCC is the person who is determining your fees. So
who has authority to finalize apart from AA?
The liquidator is an absolute controlling person, sir. He has all the authority. He has the authority to override the decisions of stakeholder consultation committee. And as the law says, you can override the decisions. You don't require adjudicating authority approval to override. They are asking only you to intimate, so that none of the liquidator make any fraudulent attempt. So they just wanted the liquidator to intimate the adjudicating authority and the board. A liquidator is the absolute powerful person in the liquidation process.
Whereas in CIRP, COC has the power.
Yes, we are just
RP is only a recommendatory nature.
Certainly.
Or at managerial nature, I already put it in the presentation.
Correct.
Okay, sir. Thank you.
Yes,
Mr. Suresh Kumar, I sincerely appreciate you for giving that commendatory the performance and under the PPT. You have clarified a lot of things which are in my mind. And with your pleasure, I want to ask some few queries.
yes, sir.
Sir, regarding this 66% prior approval by the COC for certain activities.
Yes.
One thing is that disposal of shares to any third party.
So can you repeat the last question?
Sir, regarding the transfer of shares, disposal of shares to any third party during the CIRP process.
Yes. So
I would like to bring to you the important thing for listed companies, Suppose I'm having some 5,000 shares in listed company. The particular company, subject company is under CIRP process. So whether that I have to get the approval of the COC for transfer of the shares, it is a listed company. You may know that the shares of the listed company are public company are freely transferable. No restrictions are placed.
So there, in such scenario, what is our main see, obviously, these are all the practical difficulties which RP has it. So we generally, I advise them, first anyway, as soon as the matter comes under CIRP and you took charge of IRP, please make this order and the entire public announcement and all are communicated to the stock exchange and made available to the shareholders at the first instance.
Yes,
Second, we tell them to ensure that in the first COC meeting, you pass a resolution that the share transfer agent will be there. Any company will have the share transfer. You minutize that. It is being a listed company and it is all compliant and BSC or NSC the trading is happening. The RP or IRP have been they are directed to comply with all the Class 49A listing agreement requirements and the transfers are regularized on a routine way. Only if you see it off under the Companies Act, the board of directors are empowered to approve or reject share transfers. Whereas in a public limited company, it doesn't come to the board. Public limited listed company, the transfer happens outside the board. The board doesn't have a role. So in the same context, COC doesn't have a role to play. But as a IRP or RP, we will see that. But for the transfers to happen smooth, you have to comply with the listing agreement and all the stock exchange compliances. So
Yes,
see that the IRP under the guidance of the COC, under the authority of COC, you are making arrangements to comply with that. You please discuss this in the COC meeting, minutize it so that you are compliant upfront in the law.
For demat of shares, that this will not be done, I think, isn't it? The seamless transfer of shares by online transfers. So that transfer of shares cannot be restricted at all. That is my viewpoint, sir. Neither the COC nor the adjudicating authority that have the powers to stop the transfers.
Sir, see, what you are saying is correct. To that extent of micro level, the law writers have not gone into the depth of it. The law writers have seen it in the context of the debtors in control, the board of directors who are in control are replaced with the COC. So what board of directors are doing, the same thing the COC is supposed to do in this time. In listed company, board of directors doesn't have power to discuss regarding the share transfer because that is dealt outside. Same context in COC also will not get into the things. So we have to equate the Companies Act at par with this IBC thing. BOD power suspended and it just moves to COC. That's all. To be on a safer side, we document this. We are not approving the transfer. The transfer is approved by stock exchange outside.
And sorry, sir. Second view that is that regarding this unwritten law to be followed by the COC or the code of conduct recently that given the IBP a few months before. These are the things that cannot be enforced unless the RBI comes to the picture, isn't it? So they are more bound by this circulars and RBI that amendments to the RBI Act. And this can be enforced only with the concurrence of the RBI. That is my viewpoint, sir.
Sir, you are right. But the biggest practical problem is if they are not following, what is the penalty on them? As an RP, can you penalize them? Today, the adjudicating authority can penalize them if the SCC or if the COC members are not adhering to it. If they blindly are rejected, we don't have anything. We can go and ask adjudicating authority, he can exceptionally approve.
Yeah,
So
we have what to the member. We have only 3-4 minutes. Others are also having a few questions to ask. Request to members to adhere with the timeline.
I have a request.
Hello, sir. Good afternoon. Santan Lakshmi here. I have posted a question in the chat box, sir. I'm asking it again. A basic question: when the assets are not liquidated, when it takes several months to get some money from and out of the asset of the CD, is the liquidator liable to spend money from his or her pocket for the security of the asset, or insist the financial creditor or SEC to spend the liquidation cost then and there?
Madam, the CIRP regulation is very clear. It is FC has to fund for the whole liquidation cost. When the liquidation is proposed for, to the extent that you have liquid assets in the company, you can use it for liquidation purpose. If the liquid assets are not adequate to meet the liquidation cost, it is the responsibility of the FC to fund it. There is a clear CIRP regulation. I don't remember 39B or ABC. That's a regulation. There is a very clear thing. If there is no funding already approved in the COC minutes, you can request the COC to do it off. If the COC is denying, you can move an IA before adjudicating authority seeking direction to the COC to fund for it off. It is the written law that FC has to fund for it.
Oh, thank you so much, sir.
Yeah. Sir, this is Ramana Reddy. Sir, for 50 crores debt,
your voice is echoing, not clear. Sorry, sir. Your voice is echoing.
Sir, the resolution applicant pays 20 crores out of 50 crores debt, for example. Then what would be the accountability of that remaining balance, whether it will go to P&L or reserve, sir? How it will be accounted, sir?
Sir, see, if the resolution plan comes for 20 crore, whereas the asset is 50 crore, finally it is all when you recast the balance sheet, the entire asset side, you will reset it to 20 crore. Or if they are putting the entire 50 crore, then what we do is we create a CE means a insolvency process reserve account. There is a capital reserve we create. The difference amount will go and sit it in the capital reserve account, which is not a distributable amount for dividend. So below the capital, you will have the capital reserve. You can name that particular capital reserve in any name. Some people say that it is a insolvency cost reserve or anything. So you see, there are two ways you can recast the balance sheet. One, reduce the assets to the 20 crore level and make the capital equivalent. Otherwise, retain the asset side of the balance sheet as it is, liability side, whatever capital you have put it as capital portion, balance remaining amount, because anyway you have removed all the liabilities. In your resolution plan approval, all liability go away. So the differential figure will go and sit as a capital reserve. So you can name that capital reserve as an insolvency process, CIRP resolution plan reserve or something else, whatever it is.
Yeah, request to all members and participants. For the PIPM member, we've had a separate session for the Q&A with Suresh sir for all the doubts of CIRP as well as liquidation. And considering the time, we are having another session on 1 o'clock, our internal investment meeting. Therefore, I request Paramjit ji, please come forward and bind up the meeting. Thank you.
Thank you, sir. I, on behalf of all members of PIPPL, thank you very much to Suresh sir for giving his valuable time and enlighten the member with the practical aspects of role of COC in CIRP. He has very vast knowledge, and whenever we request him, he gives us time. So I thank you from my heart and on behalf of every member of PIPPL. And I also thank you to the all attendees in this webinar who has made this webinar very successful. Today also there was approximately 40 members attended this. This is only due to Mahalingam Suresh Kumar ji, his popularity and his practical knowledge in this subject. So with these words, I thank you once again and announce to end the session. Thank you so much.
किस हिसाब से था वोट का? और रौनक की मम्मी जीत गई उसमें, ग्रेसी है प्राइमरी में, जो उसकी मम्मी भी थी, उसमें तो 12 लोग थे.
Do we close the session, sir? You are mute, sir. Unmute.
Please go out and close it, please.
Okay, thank you.
Thank you.
Thank you.